The other notable thing, I don't know if we have more data to bring this, to reground this, Alex, but the other thing you mentioned, the Series Bs were massively up. This makes sense to me, Ryan, because you have so many of these mega funds with billions of dollars. And for them, they have to put more money to work. And, that is going to lead to valuation increases. So then that leads us to the discussion. We had a company this week we invested in 2 years ago, kind of maybe call it a $15 million valuation. 3 years later, maybe 3 years later, they're at a $500 million valuation. Do we sell 20% of our ownership and send distributions, since that investment is now theoretically 30x? That would be 32x. Do we trim 10, 20%? Or do we take our pro rata, or do we do both? Syndicate our pro rata? What do you think, Ryan? How do you think about when you trim a position? Because distributions are rare and the opportunity to distribute is rare. What's your current philosophy on that?
Yeah, we've done this once. We did this about 18 months ago. We invested in the seed round of deal in the first fund, and that was a 10 mil post. It's gone on, I think the last round was on $12 billion valuation. And 18 months ago, we're like, well, okay, we have an opportunity to sell 14% of our position to return the fund. And
that's a 400x return roughly?
Yeah. It's like 10x fund returner on paper. And, we'll see. It doesn't count until it's true DPI, but we're like, well, let's get 1x DPI.
The SPY thing isn't going to sink your DPI. You'll be okay.
Yeah, we'll see. No, I'm bullish. I'm bullish on the company. I was bullish back then. I'm bullish now. And granted, we did sell lower than the $12 billion number back then, because this is also when the market was also in the slumps a little bit. But the thought was, okay, one, our LPs, they've been, they're going to be so happy to see some liquidity. No one's getting liquidity like 18 months ago. Two, we're still going to have 84%, 83% of our position remaining. So even if we make a mistake and it, 10x's from here, we're still good. So we did make that decision, and it was the right one. Even though today it would sell for like more than 2x, in the market from what we sold back then. But so anyway, to answer your question, Jason, I don't know. It's so subjective. I think it's wise for early stage funds, maybe after 5, 6, 7, 8 years in their positions, to start thinking about liquidity and take 20, 30% off the table, even if they have high confidence that, it's going to go up from there.
My best advice is, if you have an opportunity, since they're so rare, take it, sell 10 to 20% twice, maybe 3 times. And then by the end of the story, you have 70% of what you could have had. No LP is going to be upset about that.